All right. Hey, traders. Okay, let's take a look at what happened last night and then what happened going through this morning. So you can see, remember yesterday into close we were looking for was this low was going to hold. This was a very, like a lot of pressure, and it was testing a couple days back, and I rescaled this chart a little bit so we could get a little bit further back and see this one. It was this low here, which is the origin position for the bulls who are coming into the market here. And we had some roots here, and this was pressuring this low. And the expectation was to see that low hold, but we needed to retest it because there were no real good positions during the day testing the lows out yesterday. We just didn't have a lot of bulls in there, and so we had to test it out. Overnight, the market pushed down pretty aggressively. And I think that had to do with a bunch of pended orders down here where the market was rushing towards where the volume was and filling those orders. And the low held. The bulls came in overnight. It makes it difficult to trade because you can't detect the entries very well when it's overnight because there's not as much data to look at. You just have your expectations to trade with. It worked out just swimmingly. The market came down, tested as close as it could get, and hasn't looked back since. Now we're at the open. So this is the situation, one of the situations we were working on, looking at. You can see the market has popped up. Daily tension. Sorry, bears, it's over. You lost it. Not only did they lose it, there was almost no response to seeing the probability shift back positive for the bullish position. Now, the reason I think this happened is because last night the lows held. We saw it work. The bulls, they were able to hold out those lows. The bears failed in so many ways. And so I think today, seeing the probabilities pop back up and having no response to it is an indication that the bears are not interested in trying to participate here. They're going to be in an unwinding their positions mode. This right here is a trap. Everyone who got in there thinking we were going to break down and run down to, 100, 200 points down in a bearish move is now stuck in a position. I know that today's the OPEX, but we had a ton of activity yesterday. The expectation for all of this, which you could see them move face there, all this activity, you could see this is kind of normal. This is today, and this is yesterday. You just see it was very active. The expectation here, as far as I can tell, is just expecting the implied volatility to shoot through the roof. We're expecting the market to go one way or the other. And I think that's a reasonable expectation, as well as OPEX today. But these folks here were saying, well, if we break through the lows, we're going to head straight down. If we don't, well, we've got a big old trap, and this is going to head straight up. And I think that really played into why people were executing so many options positions on both sides all over the place, just like mad. So today, let's take a look at the positioning. Before we do that, let's review a little bit. We wanted to see when if this pops up, that what we were looking to see, or what I was looking to see yesterday, would be to see bears trap, bulls enter, and the liquidation, which I'm going to mark LQ, lines up with 30-minute tension crossing 0. These bears getting knocked out should line up about with this popping up here over 0. And we'll see if the bulls can pump the market through by knocking out that counterparty and driving 30-minute tensions through 0. And we get that 30-minute over, and the bears are just going to be unwinding all day, which means we should be looking at a squeeze. This is going to have a bleed up, squeeze, whatever you want to call it. I like to call it an inversion. And I think I don't have those charts up. Let me pop out chart here. This is going to get crazy. Thinkorswim does not like doing this stuff. Well, that's the thinking. That's the expectation. So what we're looking for this morning is to see some bears, then to see some bulls, and to see those bears get knocked out at just the right time. Now, I saved tick. Ooh, yeah, that's it. Got it. All right, so while this is loaded, it's the tick, the money tick, and the ADD, the money ADD. All right, well, that loads. Now, the reason I'm pulling that up is because during a grind or during a bleed up type of thing, these tools are pretty good ones to watch to model out how it's working. Okay. Now the first thing that happened, we saw decay dip down here, showing some negative energy coming into the market just right after the open a little bit, and then pop right back up. After it pops up, here is our trapped orders. There are our bears today. And these bears are right on the backside of that, the bearish position, I think, that actually did a little bit of work from a couple days ago. So it's at a little bit of a worse price. We're about the same area. And then looking at this, there's just not really a whole lot to be done here in terms of bulls. Volume trapped orders doesn't really show up till here. I'm not considering a signal that you could use for trapped orders to ride off of. So we still sort of need some bulls coming in here. I'm going to scoot this over through here. I'm going to get rid of that. We still have some conservative stops that could get hit intraday. This got worked, so I'm going to move it, remove it. Okay, so this is sort of the setup. This is the setup that we have right now. So if the bulls want to come in, you can ask, where are they? Well, the first place is the velocity could lean down. Right now we have like an apparent trajectory here. You can see it's kind of like pointing here. I don't know, later in the afternoon, that could target that, or we could have decay come down. I think decay is closer. So I just looking at this going, okay, well, if this moved down versus this, I think decay would be more likely to find a bullish sample. It could be a while. Another thing that we have going on is a multi-day decay retest. We scoot this over here. See that testing the high of yesterday. And there's the sample. You see there's the trapped orders and the first bit of downside move there. So we have in this spot here, bears that could be coming in. The question is this their only opportunity? And I think not really, mostly because of tension. The bears could get another opportunity when tension hits zero to try and capitalize there on a position. So they have some other opportunities. And the other question is, do they seem to be actively participating? And looking at this and the way that this moved and how tension responded, not really. So the multi-day decay retest, while it's there and it's pretty clear, I don't think we have the conditions to really say, yes, for sure, these bears are coming in and taking this risk reduction. I don't know. I think they got some other stuff that they could go for that's a little bit better, that could do a little bit more. So I'm not feeling particularly interested in this multi-day decay retest. The thing that interests me the most right now is where are bulls? This is the thing that I'm really, we gotta find them. We're gonna need to figure out how to do that. And I think, and a velocity move down to zero is gonna cause prices to come down pretty good. I mean, we're gonna see things moving down pretty good if that happens. We could let things just sort of sit here for a little while, and decay will, we could get less aggressive of a move here and just pump some negative energy in there, and we could get decay down to zero. That could create a bullish sample that we could run the market up over. In either scenario, I think to get the bulls into the market, prices are going to have to come down a little bit, maybe a little bit more than you want. But if we can get those bulls into the market, and those bulls can hit and get this position, turning upside down, then we can get this 30-minute right here. And I want to line up the liquidation of these bears with the crossover of tension. That's what I want to. I want to see that. I think it would be the absolute best. But this is moving pretty quick. I mean, 11:10, and that's that's pretty close. This is getting close. 25 minutes. The question is, can we get decay to give us some sort of signal in 25 minutes? And I'm thinking, that's going to be tough. You got to drive this down pretty aggressively to get decay down to 0 in 25 minutes. It's a ways up. Look how long it took us just to get from here to here. Like that. It was like a half hour. Well, maybe they could pull, I don't know, a half hour. And it was, the first 30 minutes or 40 minutes are going to be probably some of the most aggressive movements in decay, because it's usually where things are more aggressive. We're going to drift around the afternoon, and this could take, it could happen. It's just lining these two up is going to be a lot, because after the bulls hit, then they also need to get it up and liquidating the bears by the time tension hits 0, because that's what I'd like to see. So we'll see what they can pull off. We'll see. So right now, it's like, yeah, I think a grind kind of upward is in the works, but is it yet? And I'm having a hard time. I'm having a hard time saying yes yet. We still need to find some bulls. You can't just pop out of a low and give nobody the opportunity to consume any liquidity. You just can't. I don't care about dark pools. Dark pools don't mean anything to me. This is a function of structure. I think I think it comes before dark pools. You first you prep the product. Then you get your inventory. Then you find your client, right? And then you sell it to them, right? Well, the issue is that this trapping in here is this process. It's gathering your inventory, prepping your product. Dark pools doesn't happen until here, where you get the dark pools who hide the selling for, and it's usually like 5 to 24 hours. So they're going to hide the selling of the product to their clients. So I don't care about dark pools. Dark pools won't evade me. Because I'm not using any of the volume or transactions that are happening on like the ES or whatever to do this analysis. So dark pools, can't get me there. I can still see the preparation of the inventory and the responses from that inventory being distributed and things like that. So you're not going to be able to use dark pools to get around this analysis in terms of positioning. So if your argument is, well, dark pools were rising through the lows, I'd say that's fine, but where's the inventory to supply to those dark pools and things like that? That's my issue with these lows not having a position on them. Dark pools just aren't enough for me. So we're just sort of going to be, I think, hanging out in this range. It would be irritating, I think, to see the market just start to drift up with no real bullish entry, because that means there just was no opportunity here, and we just had bullishness show up, which is frustrating, but at least you're not wrong. I like opportunity to pop in. So the thing I'm going to be looking for next is some form of a bullish sample. And it's going to be one of these. I got a hunch here, leaning towards decay, because to me it looks closer. It just looks like less work to get decay down to 0. You get the sample, you get the volume. I anticipate them popping in and doing their very best to pop this over 0. I also think a little red flag here for the bears is that in the morning when we had a 0 test, they did nothing. So the bears have just, long-term bears just gave up. I don't see them. Sorry, they're not here. They didn't do anything. They should have defended. They should have been a little more enthusiastic about keeping the probabilities in their favor instead of just going, meh. Losing probabilities doesn't matter to me. It's like, it should. It's going to matter in the future, which is where profits exist. So that's where we are, just waiting for the bulls to show up. The other scenario we were looking for, if you remember, was to see it pop down. And we'd see the market gap down, see it move down, and what the bears needed was to trap in a bull and get them to liquidate as we breach this low. That was the other gameplay here. And that's probably what is leading into options getting crazy with their options. Or the SPX anyway, SPX regulars. but the lows held overnight. So the market moved down there. There wasn't much to be done. In fact, it's really hard, I think, for one side or the other side to breach a low that has that kind of support on it without intraday markets, because it's difficult to trap in larger parties overnight. There's just not as much liquidity. Your impact is more. Anyway, that's what we're waiting on. We got to see some bulls come in. We got to see those bulls buy into the market. I want to see a good response from bulls. So if I got everything I wanted, it would look something like this. It come down, get a sample. Prices could drift down. I don't know. I don't care. Close the gap. We get trapped orders in here, and then it starts to come up. We could even grab up another bearish, so there'd be bulls here. Drift, and then I just want to see it go just basically right up to the stop while we see tension go, and then accelerate. And then throughout the day, we could just, I don't even care what tension does after that. I think then the market would, at about this point, start to look like a squeeze. And roll higher and higher. And I don't think that we should be letting this group out. This is the bag folder for a pretty decent move. This type of trap where you have a whole day of the bears half a day of the bears enthusiastic can lead to 2 or 3 days of upside where the bears are trying to believe in their breakdown, but it's their belief that's destroying them. It's the fact that they're still holding a bad position that's hemorrhaging money left and right that convinces them to hold, that's going to cause issues for them. So I don't think it makes sense to let this group out. Do not let them have their money back. Don't give them the chance for break even. Don't do any of that. Just don't. Then we keep the market. We can move the market up for a good couple days, and that's great. That's great. That's what I want to see happen. Okay. That's it. That's all I got for the morning time. I will pop back in the afternoon, or just after the bulls, we find some sort of bullish sample. Until the bulls come in, nothing's going to change. There's just not going to be anything changing here. We're going to have the same condition. It's going to probably just move sideways, drift upward until the market decides, hey, let's go lean down. Once you see the market start to move start to move down, get through here, you start to see decay come down. You'll say, okay, I know where you're headed. At that point, you kind of know where the market's going. It's getting those bulls in. And then once the bulls hit, you got to watch for their price response, watch for their impact on tension, make sure they're here. Then you know their objective, which is drive it up through the stops of the bears. Make sure 30-minute tensions go through zero, and then you know that the rest of the day is probably going to be something like a squeeze or a sideways drift. Not a whole lot of activity there, but I don't think the bears should get any advantage here. We are not headed down through the floor. We are not going to go down and retest the lows again. I think that happened last night. It was quick. It was tough. There were not a lot of great liquidity style entries on them. And that's just how bull markets are sometimes. So I'll see you guys later on in the day.